The challenge for central bankers is obviously these supply shocks because it creates the worst environment. You've got higher inflation and it tends to hit economic growth as well.
Right.
And that's the dual mandate of central banks is always trying to balance those two things. Obviously, at the moment, we've had kind of higher inflation. We had this in 2022, higher inflation. The economy is a bit weaker, but we never really hit that point where the central banks have to choose between the two. You think in the current environment, if it came down to it, that you had, say, a big oil shock and a significant weakening in the economy at a time of higher inflation, are they still as inflation fighting as, say, Paul Volcker or not? Or how does that play out?
Paul Volcker was a one-trick pony, a one-trick event, a one-time deal. Because the thing that when economists talk about inflation, we talk about the delta, the rate of change in the total series, right? So we say to people, don't worry, inflation's going down. And they go to the supermarket and go, are you mental? Right? And they're quite right because we don't look at levels, right? And if you look at the price level, it's done this. And wages have done that. So when we tell people that inflation's going down, what we're actually saying is, don't worry, you're getting poorer more slowly. Now, in that environment, you can't be Paul Volcker. Because if you do, with already terrible politics, you're just putting populist dynamite around the central bank and saying, here, hold my matches. So if you consider during the last inflationary period, not one central bank anywhere raised their interest rates above the nominal rate of inflation. Not one. They shadowed it. They did just enough to look like they were doing something as the supply shock worked itself out. They didn't strangle credit. They didn't cause a recession. In fact, economic activity went up with the short-term stimulus of all that money flying around. And they let it ride out, and then they declared victory at the end of it. It's a nice trick. But it actually shows that there's no Paul Volcker coming along. Because if you do, people will burn the central bank down. Because they just live ever-increasing levels of price with ever-diminishing wage expectations. And that's just unsustainable.